Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 2nd of February. Bank of England is likely to remain neutral on Super Thursday. Today, market participants will have their gaze locked on the Bank of England's first Super Thursday of the year. Considering how quickly inflation accelerated in recent months, we expect investors to be on the lookout for any comments regarding the limits of the bank's willingness to look through above target inflation. It would be interesting to see if Governor Carney is questioned on whether there is a specific CPI rate that the bank considers as an unofficial ceiling, after which it will consider tightening policy in order to curb inflation. Overall, we expect a neutral tone from the Bank of England, indicating that policy can still respond in both directions if needed. Also, we think that the GDP forecasts are likely to be revised upwards, considering the strength in the UK data. At the same time, given sterling's notable rebound since the latest inflation report, we see the case for a modest downward revision in the near-term CPI forecasts. As such, we believe that the path of least resistance for sterling may be to the upside, at least in the aftermath of the meeting. GBP-USD traded higher yesterday, breaking above the resistance now turned into support of 126.60. The move has confirmed the forthcoming higher high on the 4-hour chart, and that the short-term trend is back positive. We now expect the bulls to target our next resistance of 127.20, defined by the peaks of the 13th and 14th of December. A break above that level is possible to open the way for the 127.70 barrier. Switching to the daily chart, even though the short-term trend appears to be positive, the medium-term path remains flat. The rate has been trading between 121 and 128.50 since the 4th of October. In the US, yesterday, the FOMC kept borrowing costs unchanged, as was widely expected, and offered almost no new hints with regards to the timing of the next rate hike. The only material shift from the previous policy statement was an upgrade in the outlook for consumer and businesses sentiment, though this is a relatively minor improvement. Perhaps due to the absence of any fresh forward guidance, the reaction in the dollar was somewhat negative. However, as for the currency's path over the next few days, we remain cautiously optimistic for two main reasons. Firstly, we think that tomorrow's employment report may overcome market expectations, considering that the ADP report was particularly strong yesterday. What's more, on Monday, we may get clearer clarity with regards to the new administration's fiscal plans, as the president is expected to submit a preliminary budget proposal to Congress. The preliminary numbers could shed some light into the government's objectives and thereby diminish some of the uncertainty around the US policy outlook. Euro-dollar tumbled yesterday after it hit resistance at the key barrier of 108. Nevertheless, the slide was stopped by the 107.40 level, and at the time of the FOMC decision, the rate rebounded. Now it looks to be headed for another test near the 108 obstacle, where a possible break could prove a game changer. For now, we prefer to remain neutral, as the bears may take charge again near 108 and aim for another test at 107.40. If they manage to overcome that support, we may have the completion of a double top on the 4-hour chart, and we could see initial extensions towards the 106.85 hurdle. As for the rest of today's highlights in the UK, besides the Bank of England decision, the government is also expected to publish its white paper, a formal policy document that will set out its Brexit negotiating objectives. However, considering that this will probably be a formal reiteration of what Prime Minister May outlined in her Brexit speech on the 16th of January, we do not expect a major market-moving reaction from this release. As for the UK economic data, we get the construction PMI for January, though market focus is likely to be fixed on the Bank of England decision. From the US, we get the preliminary labor costs index for the fourth quarter, and the forecast is for a notable pickup. At the same time, we get initial jobless claims for the week that ended on the 27th of January. Besides Governor Carney, we have one more speaker scheduled for today, ECB Executive Board member Benoit Guer. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.